Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Financial markets are awaiting a Kevin Warsh speech at the Jackson Hole Symposium, specifically about how he sees the Fed's role when the US Treasury seems to be undermining it. What he says about the fight against inflation, if anything, will be revealing. This has markets hesitating today in anticipation, although equity markets are bullish off the strong Nvidia results. US initial jobless claims fell marginally last week, and by marginally more than seasonal factors would have anticipated. There are now 1.78 million people on these benefits, little different to a week ago, but 7.5% less than a year ago. The US merchandise trade deficit came in at $119 billion in July, up $17 billion from an unusually high $101 billion in June, and the $101 billion in the same month in 2025. Apart from the rush to beat incoming tariffs just after Trump took office in early 2025, this latest result is a record high. Americans seem happy to pay these tariffs just to get the products they need. Exports fell from June, while imports rose on the same basis. At the same time, the stockpiling trend seems to be gathering pace. US retail inventories rose in July, as did wholesale inventories, and both at an unexpectedly faster pace. Both are now at record high levels. Retail inventories are 3.9% higher than year-ago levels now, with wholesale inventories up 5.6% on that basis. There could be an unwelcome reckoning if firms come to decide they are overstocked. History shows their boardrooms are usually unhappy with excessive stocks. Meanwhile, the Kansas City Fed Factory Survey shows this with a little change report that is holding its expansion. New order levels are similar to last month, but are falling for export orders. Input costs are rising faster than selling prices there. And there was a US Treasury 7-year bond auction earlier today, where the median yield came in at 4.46%, and that is more costly than the prior equivalent event a month ago. In Canada, they reported a surprise current account surplus of 8.8 billion Canadian dollars in the second quarter of 2026. It is their first quarterly surplus since 2022 and the largest since 2005. Across the Pacific, China said its industrial profits rose more than 11% in July from the same month a year earlier. As good as this is, it was actually the softest pace this year. And the Bank of Korea has raised its policy rate by 25 basis points yesterday to 3% in a second consecutive move up. They target a 2% inflation rate. Korea has inflation at 2.8%, although it did dip in July. And the Philippine Central Bank raised its policy rate by 25 basis points to 5% as expected yesterday. They target a 2 to 4% range for inflation and have current inflation at 6.2%. Taiwanese consumer sentiment was little changed in August, staying better than it was earlier in the year, but from a long-term perspective, it has been relatively low since the pandemic. And locally, after Wednesday's above-expectation Australian CPI result, and plenty of evidence that the non-fuel, less volatile items are rising in price faster now, we noticed an uptick in the pricing for a chance for a late September rate hike by the RBA. True, it isn't an odds-on chance yet, but a notable one-day reaction. Currency markets rose on the prospects too. NAB is tipping a September rate hike now. And staying in Australia, household spending leapt 7% in July from a year ago, the fastest growth in the past 10 years, apart from during the pandemic recovery. The 1.1% rise in July from June builds on the June 1% monthly rise and the 1.2% May rise. This is impressive momentum. Financial markets had expected only a 0.4% monthly rise and a 4.4% year-on-year rise. It was a broad-based expansion in every sector other than for furnishings and household equipment. Likely, no one saw a result this positive coming. It'll bolster bets the RBA will push through a rate rise sooner. Global container freight rates have stayed high, dipping just 1% over the past week. That puts them 111% higher than year-ago levels. Bulk cargo rates are up 10% for the week and nearing their yearly high again. From a year ago, these rates are up 50%. The US Treasury 10-year yield is now just on 4.67%, unchanged from this time yesterday. The 30-year yield is at 5.19%, also unchanged, and awaiting the Kevin Warsh speech. The price of gold is now at $4,604 an ounce and virtually unchanged from yesterday at this time, but silver's risen $1 to just on $69 an ounce. Oil prices are up $1.50 from yesterday at just on $84 a barrel in the US, while the international Brent price is up the same at just over $90 a barrel now. And the Kiwi dollar is up 10 basis points from yesterday at just on 59.5 US cents. Against the Aussie, we're down 20 basis points at 82.7 Australian cents. Against the euro, we're up 10 basis points at 51.1 euro cents. That all means our trade-weighted index starts today at just over 62.9 and little change from this time yesterday. And the Bitcoin price starts today at $80,434 and up 2.5% from yesterday. Volatility over the past 24 hours has remained modest, though, at just on plus or minus 1.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.